Well, gold has done a lot better than Bitcoin the last couple of years, last 4 years. But most people have bought Bitcoin. They haven't bought gold. But central banks are buying gold. I mean, they know what they're doing. They're buying gold. They're not buying Bitcoin. But eventually, I think private investors will start buying more gold. And I think the air coming out of the crypto bubble will help move that process along. In fact, I think one of the reasons that Bitcoin was able to do so well, from when it started until, recently, was because gold went sideways for about 12, 13 years. Now that gold has broken out of that consolidation, gold has now doubled in the last 2 years, and silver now is caught up, and now silver's at record highs. Silver's almost $60 an ounce, so it's broken through its $50 double top. So now we're in another stage of precious metals bull market.
The current divergence between physical precious metals and speculative digital assets is becoming increasingly visible as gold decisively outperforms alternative stores of value. With gold doubling over the last 2 years and silver breaking through its historic ceiling toward new highs, the broader market is being forced to reassess what constitutes lasting intrinsic value. Rising institutional demand and renewed global accumulation are reinforcing metals' monetary relevance at a time when synthetic liquidity and intangible speculation face growing scrutiny. Peter Schiff, a longtime monetary economist, and CZ, a significant figure in the digital asset industry, frame this moment as a confrontation between assets with deep utility and scarcity versus assets dependent on continued speculative demand. One side stresses gold's role as an industrially indispensable and eternally durable reserve asset. The other highlights Bitcoin's fixed supply and digital transportability. Yet the accelerating bull market in physical metal underscores the renewed priority investors place on durability, utility, and centuries-old monetary function. As gold and silver move into a stronger phase of price discovery, this divide will only sharpen. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, first of all, just because something is intangible, right? Yeah. I mean, there are tangible assets, there's intangible assets. I'm not saying that something has to be tangible to have value. I mean, all companies, your company probably has goodwill that, that has value, but it's not something you can touch, feel. It's an intangible asset. And what makes Bitcoin worthless, as far as I'm concerned, is not the fact that I can't touch it or taste it or smell it. I guess I recognize that things can be intangible and have value. It's that you can't do anything with it. It doesn't have a utility beyond the fact that, yes, I can transfer it to you and you can transfer it to somebody else. And the whole methodology, the way it works, yes, very smart. The way the whole system is set up, I understand that. But at the end of the day, when I transfer my Bitcoin to you, I've transferred nothing. I have nothing. I give you nothing, right? When I transfer tokenized gold to you, I've transferred gold. I've transferred the ownership of the gold. And what gives the gold the value is what you do with it as a metal. Gold has properties that other metals don't have, that other elements don't have, and it's needed. There are industries that need gold. They must buy gold. They can't substitute copper or another metal. There are things that only gold can do, and companies need gold. Now, because gold is scarce, there's not just an abundant supply of gold. Because it's very valuable, but there's not a lot of it, then it's going to have a high price just by supply and demand. But even if people say, well, the real price, it's not, the investment price is $4,000 an ounce, but maybe it's only worth some lesser amount. I don't know. But the reason for the price, right? Price is always going to be determined by supply and demand. One of the functions that gold serves for central banks is it backs up their currency. It's a monetary reserve asset, and that's also a use for gold, and that helps determine the price of gold because you have central banks that need it and they have to bid into the market to obtain it. But because gold doesn't decay, right, it doesn't lose any value over time. When I own gold, I don't just own what I can do with it today, but I own what somebody else can do with it in 1,000 years, in 10,000 years, because gold doesn't go away. I mean, the gold that was mined 10,000 years ago, it's still here. I mean, it doesn't go anywhere, and it's no different than it was in the past. And so gold's price today represents the present value of all of the use from now until the end of time.
Sure.
You don't have that with other commodities that have a shelf life, that decay, they rot,
Okay.
right? Gold is unique in the fact that it never goes anywhere. And that's what makes it a store of value too, because when I own gold, I am storing the use of that gold from now until the end of time. Even if I don't use it myself, if I just hold on to it, somebody somewhere in the future is going to use that gold. But there are people that also need to use it today in the present.
So you said a lot of things there. There's actually a lot of things that are very interesting, and we're so close to get you over.
I wouldn't be so sure about that.
So first of all, on the gold, right? You said that the gold is always there. How much gold is there in the world?
Well, I don't have to know exactly, but I know it's pretty scarce and the supply grows relatively slowly.
We don't know, right? We don't know.
Well, no, I don't know how much is in the Earth's crust.
Right. So tomorrow we can find another. No, China can find another big mine, and then there will be more gold. And now there's synthetic diamonds. Later on, we may be advanced enough in chemistry to be able to. That's a holy grail. Everyone wants to do synthetic gold. But
they've had alchemists for centuries trying to figure out how to make gold. And in fact, there was an article recently that somebody figured out how to make a speck of gold.
I don't think that was true. The point is, though, with Bitcoin, we know exactly how much they are. All the things you said about gold, like till infinity, we know how much gold. We know how much Bitcoin there will be, and we know exactly where they are, right? So we kind of definitely a finite supply. You also mentioned very interestingly on gold. Still, I'll get to Bitcoin in a second. That the central banks use gold to back their currency, which we all know that stopped in 1971, right? So now, as you said, the currency is not really backed by anything. So gold is no longer used in that capacity.
Well, it's not used. The currencies are not redeemable in gold.
Yeah.
But if you have currency and if your currency starts losing value in the market and you need to defend it, you need to prop it up, you need something to sell to buy back your own currency. And so central banks can use gold to do that, to secure the value of their currency in the market. You can sell your gold and buy back your currency and keep it propped up. So that's why the central banks need a reserve asset.
So recently when when the gold price goes up, that means a lot of central banks are probably printing currency to buy gold themselves, right?
Well, I mean, central banks are printing money all the time. That's where inflation comes from.
So you mentioned earlier on the utility value. So you recognize that Bitcoin is not anything virtual. It doesn't have to be tangible to have value, right? So and gold's
right. It has to have a use. It has to do something.
No, but the gold's utility in commercial use is not where the value is from. Gold's value derived from is a rare commodity, right? And Bitcoin has a lot of utility. Bitcoin is not just for sending and receiving. Bitcoin is an entire industry. It's a new technology for money.
No, it's not a new technology for money because it's not being used as money, and it's not really money because it's not a commodity. It's not money by definition is going to be the most liquid commodity, and Bitcoin doesn't really qualify, even though the government might classify it as a commodity.
So there's different definitions for labels. There's a label for money, and there's a label for value. Right? Bitcoin is a $3 trillion asset, and it's still growing. Right?
Well, so Bitcoin has a price. I mean, there's no arguing that it has a price, but it has a price because people want to buy it, and because a lot of people who own it don't want to sell it because they think the price is going to keep going up. So, but that doesn't mean that it has any underlying value just because it has a price, just because people are willing to speculate in it. But that's what Bitcoin is being used as. It's not being used as money. It's being used as a speculative digital asset. I mean, to me, people collect Bitcoin,
so I think
and they collect Bitcoin because they think the collection is going to be more valuable in the future.
The widening performance gap between precious metals and digital assets is reshaping investor behavior as gold and silver push into a stronger structural uptrend. Gold's steady rise, doubling over the past 2 years, has been reinforced by persistent central bank accumulation and its unique industrial and monetary utility. Silver has accelerated even faster, breaking through its long-term ceiling and moving firmly beyond the $50 zone toward sustained price discovery. These moves highlight a rotation back toward assets with inherent value, scarcity, and universal demand, especially as speculative capital in digital markets loses momentum. The shift away from narratives tied to rapid appreciation and toward assets backed by real-world necessity is becoming clearer. Metals are regaining ground lost over the years when digital speculation dominated inflows, and continued strength suggests a multi-year cycle in which utility, durability, and monetary relevance guide capital. Now, let's get back to the interview.
Bitcoin has price. I don't dispute that there is a price for Bitcoin, but price and value are two completely different things. You cannot store a price. Bitcoin has a price today. I don't know what the price is going to be tomorrow, but it has no value today and it's going to have no value tomorrow. But that doesn't stop people from buying it. But the value that most people place in Bitcoin is that they think they're going to get rich if they buy it. They think if I buy this Bitcoin and I just hold on to it and ride out all the volatility, I'm going to be rich. So that's what people are buying. They're buying that lottery ticket that's going to pay off. And when people don't want to buy that anymore, when people stop believing in this fantasy that Bitcoin is going to the moon, then there's not going to be any demand for it anymore.
You're looking at that purely from a speculator's perspective.
Well, that's who buys Bitcoin, by and large. Now, look, most of the people in this room maybe are diehard Bitcoin maxis that actually believe all this nonsense, fine. But the vast majority of people buying, who do you think is buying Bitcoin
How many
ETFs?
people in the audience are developing something in the Bitcoin ecosystem? Developers, coders, project, not a lot, but there's quite a few developers here, right? So not everybody's a speculator. So speculators, yes.
No, this room, this is a biased sample.
Of course,
I mean, if
but
you
it
look,
exists.
Right, yes, but this is a tiny part of what's driving Bitcoin at this point. If you look at who is buying the Bitcoin ETFs, right, that have been the lion's share of the buying before these corporate treasury companies, these are not, true believers. They are just buying it because it's going up. They're seeing all the hype and they're being told you got to buy this. It's the digital. It's going to go up. It's the new thing. And so people are buying it in their stock portfolios. They don't care about any of the qualities that you talk about that Bitcoin has. They don't care about any of that. They don't self-custody it. They're buying it in their brokerage account. It's a symbol, and they're looking at it to go up. And when it stops going up and it starts going down, they're just going to sell. They're just going to move on and take their chips and put them in someplace else.
Peter, what you described exists in stock markets, in traditional fiat markets as well. So there's speculators in every market, and then there's builders who are building the ecosystem, who are building utility value. The speculators are always loud. That's why NASDAQ exists, right? So all the guys who are buying Bitcoin ETFs, they already bought stocks. They already have stock ETFs, currency ETFs, etc. So that exists in traditional markets as well.
Yeah, look.
Just having them doesn't mean that Bitcoin has no value.
No, well,
right?
Yes, just because there's speculators in the stock market too doesn't mean that legitimizes Bitcoin because they're speculators. Look, when you're speculating,
it's reversed. Just having speculators does not delegitimize.
But when I'm speculating on a stock, at least in theory, I'm speculating on a business, and I'm making a bet that business becomes more valuable in the future than it is today because it has more sales, it has more earnings, it pays a higher dividend. So I'm betting on the growth of a business.
Just look at this company. Go Binance.
Right. Well, sure. Well, Binance is not big. Binance is a great business right now, right? You're the casino. The house wins, right?
No, we're not
gambling.
We are a licensed we're a licensed financial institution in 30-something countries now.
All right. Well, okay. Apart from that, but I'm talking about the people that are just trading Bitcoin on the platform. But I just forgot what I was talking about before you interrupted. What was the point that I was about to make? I just don't even remember.
We were talking about speculators.
Oh, yeah, right. So you're speculating on a company becoming more valuable. When I buy Bitcoin is not going to generate more income in the future than it does now because it generates no income now. Bitcoin is not an income-producing asset. When I'm speculating on Bitcoin, all I'm doing is betting that somebody in the future is going to pay a higher price than I did. I'm just betting that there's going to be more demand for Bitcoin in the future than there is now, and that the price is going to be higher. So it's a pure speculation on price without any other factor. And so Bitcoin is far more speculative in nature than what people are doing in the stock market or in the real estate market. Now, most people, when you're buying a stock, I'm buying a business now that generates income, that pays dividends. Not all stocks are simply gambling on the growth of a business that may or may not come. But Bitcoin is 100% speculation in that I'm buying it solely because I believe that somebody will pay a higher price. And the only reason that that person is going to buy it is because they believe that the next person is going to pay a higher price for the exact same thing,
but Peter,
even though it hasn't changed at all.
But we just established that the speculator is only a small part of the ecosystem. Even though they're very loud, they trade a lot. But we just discussed this point, right?
But that's what's driving the Bitcoin price.
You're saying that this small section of speculators represent all of crypto, all of Bitcoin. That's not true, right?
Well, that's what drove the price up to 90,000. Without all those, where do you think Bitcoin's price would be right now if all this speculative money hadn't poured in, to all these ETFs and all these Bitcoin treasury companies
Peter,
that have been buying up Bitcoin? Without all that speculative money, where do you think the price would be?
I don't think I can convince you on this. But again, you are taking a small sample of the
It's
population.
not small.
Small or big, but you're taking a portion of it and sort of overgeneralizing that to the entire industry. If it's only speculator, the price wouldn't be there. There will always be some fundamental holders that support the price.
Well, it's mostly, I would say, over those past 4 years, right, where Bitcoin is down by 40% against gold, I would say that at least half of the people who own Bitcoin today bought it over the last 4 years.
I'm not sure. I'm not too sure.
And probably more than half the value, half the market cap was purchased in these last 4 years.
Well, every peak, the more value gets purchased at a later stage. But
people are, and so there's a lot of people now.
In terms of number of people, I'm not too sure because in this cycle, there's a lot of ETF. As you said, there's a lot.
Right.
Of
Well,
ETFs.
well, that includes all the individual shareholders in these ETFs.
Yeah.
Right. They own Bitcoin through these ETFs, and so they've come in recently. They don't have these big gains that people have that came in a long time ago.
You can't have big gains just you buy any asset. You can't expect big gains like a year.
Yes, they are. Of course, the people that bought Bitcoin expected big gains.
Expected.
They were told. I mean, go back to the beginning of the year. What were all the look? Bitcoin is lower now than it was January 1st.
But
if you go back, it was
higher than November last year.
Well, yeah, because it sold off before then. But if you go back to all the forecasts that were made by guys like Saylor, beginning of this year, where was everybody saying Bitcoin was going to be by the end of the year? I mean, nobody said lower. It was 200,000, 250,000. There were all these, pie in the sky forecasts. So people were buying Bitcoin expecting to go to the moon. They weren't expecting to lose money, which is happening.
There's a few guys who make forecasts. I usually don't make forecasts, but the price goes up and down, right? So people invest. They need to take the risk, or they need to understand that.
Well, I think a lot of the people.
Same thing with gold. Same thing with stock markets, right?
Well, but you haven't had a big influx of private investors in gold. Look, I've been in the gold business. I've had Schiff gold since 2010.
Why is that? And there has been an influx in crypto, but there hasn't been in gold.
Because gold doesn't have a sexy get-rich-quick story to it.
But you just said gold will go higher quicker.
Yeah, well, gold has done a lot better than Bitcoin in the last couple of years, last 4 years. But most people have bought Bitcoin.
Sure,
they haven't bought gold. But central banks are buying gold. I mean, they know what they're doing. They're buying gold. They're not buying Bitcoin. But eventually, I think private investors will start buying more gold. And I think the air coming out of the crypto bubble will help move that process along. In fact, I think one of the reasons that Bitcoin was able to do so well, from when it started until recently, was because gold went sideways for about 12, 13. Gold went from
and that's exactly the time when Bitcoin started.
Yes, well, because gold went from $300 an ounce, under $300 an ounce in 1999, 2000, and it went up to $1,900 in 2011, right? And so it had a big gain, and it attracted some money as a result of those huge returns. But then it just, kind of went sideways, and Bitcoin comes on the scene, and it comes out of nowhere, and it's going way up, and it's being sold, hey, this is digital
I think
gold,
we can stop
this
the
is
debate
better
right there.
than gold, this is gold 2.0, and as long as gold wasn't performing, that created an opportunity for Bitcoin to kind of steal some of its thunder and get money out of gold stocks, into crypto stocks. But now that gold has broken out of that consolidation, gold has now doubled in the last 2 years, and silver now is caught up, and now silver's at record highs. Silver's almost $60 an ounce, so it's broken through its $50 double top. So now we're in another stage of precious metals bull market where gold and silver are not going sideways. They should continue to go up year after year for many, many years to come. And so in that environment, I think it's very difficult for Bitcoin to compete because now the people who have gold have no reason to sell it to buy Bitcoin. And I think people who made the mistake of selling their Bitcoin a few years ago and buying gold are going to regret that, and they're going to try to reverse that trade. They're going to try to sell their Bitcoin and get back into gold. But that's going to be a big problem because there's no buyers for the Bitcoin. And so I think the price will collapse.
The accelerating divergence between speculative digital assets and precious metals is becoming harder for markets to ignore. As capital rotates back toward assets grounded in scarcity and real-world necessity, the momentum behind monetary metals continues to build. Gold's recent structural advance and silver's renewed strength underline a broader transition, one driven by durability, industrial relevance, and the ability to preserve value during liquidity cycles. These moves signal that investors are gradually recognizing the limitations of assets supported only by sentiment rather than intrinsic utility. This phase of the cycle favors instruments supported by centuries of monetary function and ongoing industrial demand. The shift is not driven by hype, but by structural factors that reinforce long-term resilience and ongoing global reallocation. As the cycle matures, retaining exposure to tangible stores of value remains a priority for those seeking stability amid volatility. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.